Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, in today's episode, let's dive into some of the biggest financial lessons that 2024 had to offer. And to do that with us, we have Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
First question, what, according to you, were the most defining financial or economic events of 2024, and how did they impact the investment landscape?
I can actually think of 3-4 of them. One was that beginning of the year, it all started with interest rates going down, and it started with Japan. So that was something we have been expecting for a couple of years, and it started happening steadily. And we are still in the middle of it. This could well be the beginning of what the impact of it will be, or what the level at which it will stabilize. I think the second thing, which actually was a very notable thing to my mind, it may not be, there may not be a consensus or a general opinion about that, is that sometime in the middle of the year, Securities Exchange Commission of US, it permitted a Bitcoin ETF, getting a completely new kind of legitimate investment being made into Bitcoin. That was, I think, and that is what led to the whole new boom in ETF and the Bitcoin, the cryptocurrency. And despite the fact that in first phase of the year, first quarter of the year, we had the largest crypto entrepreneur going to jail for fraudulent thing. So despite that, despite that track record, despite that background, despite that, numerous such examples, crypto gained legitimacy with the launch of this ETF. Then came, I think the other notable thing was not an economic thing, but it had an economic fallout, which was this government, Indian government, getting re-elected, but not getting re-elected as expected. Everybody was expecting the usual majority, which in the previous 2 terms everybody thought they will have, which did not come. So, market became very turbulent. But the fact is that, it was quite a notable thing. It had a very significant impact in the interim volatility. And I think, these were the 3-4 things, related to impacting market and, political economic decisions.
And what lessons did 2024 reinforce about staying invested for the long term?
It just got reinforced that, it does not make sense to lose your sleep. Make a plan and sleep over it. Be at it. Because despite all this, we are much better off at the beginning of the year than now. We are much better off now than at the beginning of the year. Diversification plays a role. Everything worked, and something worked less, something worked, but concentration did not really help. And this was just yet another, and the case for equity remains just as strong. All kind of doomsday naysayers, I think it is important that if you have a plan, then you can sleep over it. And market generally works to your favor. And despite that damning news, nothing much happened.
Now, how did the different asset classes, debt, equity, gold, real estate, how did they perform in 2024, and what can investors learn from their performance?
Once again here, if you look at the return of various categories, there was a reversion to mean in many of the thematic or sectoral categories. Pharma was the top performing category of this year. But small cap, the diversified small cap also is a very prominent player, and is a prominent segment. So I would say that diversification here plays a role. If I have to take a lesson from all that has happened, gold also did well, silver did well, and so did all equity categories, and all equity categories delivered more return than gold and silver. And gold and silver gave return that you should not be disappointed. 14% in silver so far. So I would say that, the basic principle, long-term money in equity gives you good return, and this is going to be the 4th year of successive good returns without any massive blow to the diversified category. So 2024 is a year everybody should be happy about. 2024 is a year where everybody should be happy about their long-term orientation, being diversified, not being in a narrow category. And if you were diversified, because 2024 turned out to be extremely volatile. You were far less volatile if you were diverse.
All right, now what were some of the common mistakes that investors yet again made in 2024 and, a lesson to avoid such mistakes in the future?
I don't know if I can call it a mistake because only time will prove that it is a mistake. But I would say that it is on the principle that I disagree. Any investor should not fall in habit of that. One is that individual investors pouring a lot of money, investing a lot in NFO. NFO had a great year. And it was a great year for SIP too. So on one hand, we have SIP book rising and everybody benefiting. That is a methodical approach. That is something which will reconcile, you can reconcile with, you will feel very happy about it. And you fall in good habit of doing things. And on the other hand, everybody was putting money in NFO as a tactical thing. I would blame, investors to not get tempted by such stories. Be methodical about it. You are investing for many, many years, decades, 2 decades, couple, if that is the term, don't get concentrated. Don't buy into a story. You have to buy a story that the economy will be better off. 10 years from now, we will be overall much better off. And if that is not your view, you should not be into equity. So NFO was a mistake. Second was, I think, a lot more investors are getting tempted to invest in IPOs again. Because couple of, very high performance or highly rewarding IPOs that has established that, okay, the game is on again. No, you still, 80% of the people still lose money.
So finally, if you had to summarize 2024 in one key takeaway for investors, what would that be?
If I have to summarize, 2024, and if I have to address Mr. Market, I'll say thank you. Because, it has been an extremely rewarding year, despite all kind of noise and all kind of bad news or all kind of, expected bad news or anticipation of bad news. 2024, you have nothing to complain about. I would say that, nothing bad happened. The market has gone up, broad categories have gone up, some sectors have done exceedingly well. Some completely out of favor segments of the market, something like PSU, I think it had a field day in 2024. So I would say that, and all kind of style also came into forefront. Earlier it was growth, now it is value, or sometime in the middle of the year, value went about dominating the performance of the segment of the market. So I would say that, it was another good year. It is 4th or 5th successive good year for you. Feel happy about it. And make sure that you are able to build the shock absorbers in your portfolio so that if you have a bad 2025, you can live with it.
All right, now moving on to the viewer's question. Akshar says, how do high net worth individuals approach massive wealth creation and maintenance over generations? What strategies such as diversification, professional management, tax efficiency, risk management, philanthropy, and legacy planning can be implemented by individuals aiming to build substantial wealth? How can these strategies be tailored for someone in my financial situation?
If you are really, really well off, then all these things can be achieved with great simplicity. And all these things can also be achieved may not be achieved with great complication. And not only that, it is very likely that if you are wealthy, then a lot of people will try to get after you, all the wealth managers. And what will happen is that they will try and hawk a story. All the things that you have mentioned, which is you need diversification. So achieve diversification with simplicity. Professional management. Achieve professional management and diversification by a combination of substantial index fund and some actively managed fund. So diversification and professional management is taken care of. Tax efficiency. There can't be a better story. There can't be a better avenue. There can't be a better vehicle than a mutual fund, simply because you are not liable to pay taxes. If you keep investing, your money is diversified. The fund manager is making changes, but you are not liable for any taxes till you realize some. And if you are so well off, you don't need it. You just need to grow it. So don't fiddle with it. And tax efficiency, you have all kind of tax efficiency. One is that you have invested and you are not liable to pay taxes till you realize some. The fund manager is taking some actions and you will not be liable for any of those taxes. Third is that this investment which you have entrusted to the fund manager is getting invested in equity and he's earning dividend. That is also getting accumulated. You are not liable to pay taxes. If you own a stock portfolio, you will earn dividend, and on that dividend you will have to pay taxes, and that to 30%. I hope that you'll be in the highest tax bracket. Then comes risk management, diversification, and investing in such prominent companies as an index, and entrusting your money to a credible fund manager who will be spreading your money and emphasizing something. That is a good enough. Ensuring that you are investing it with 4 big fund managers, your actively managed pool, risk management is embedded in that. Then comes philanthropy and legacy planning. That is something which you have to do, which you have to sit quietly and decide yourself and write it in your will, that what will happen with the money that you have earned, or you have earned and grown it, and whom do you want this money to be passed on to. And this is something which is a very personal decision. Don't let other people get into it. It is your choice, and it is your privilege. So I would say that all these things, if you try and get experts to do it, it will only cost you money. It will only reduce your capital. And my worry is that if you get very sophisticated wealth managers, you are more likely to incur huge cost and huge transaction cost, moving your money in and out of things as an opportunistic thing. So think very deeply about this. You are an expert of an area. You have succeeded in life. You have made money. The people in the financial services, particularly the wealth management business, they make money from that pool, which is yours. Every time they make money, you make little less money.
All right, so keep it simple, protect yourself, and stick to your plan. That's the mantra that maybe you can follow in 2025 as well. That's all we have for you in today's episode. Keep watching the space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.